Nigeria's inflation rate rose for the fourth straight month in December of 2024, hitting 34.8%. Food and non-alcoholic beverages contributed the most to price pressures, fueling fears of worsening economic challenges in the country. I'm joined now by Steve Nwachukwu, who is an economist, financial analyst, and lead researcher at Stewart Asset Management Limited. He joins me live in the studio. Thank you so much for your time, Steve. Well, of course, if you look at the inflation rate at 34.8%, that is huge. First, were you surprised when you saw the figure? Because the expectation is that by now inflation should be trending lower. So what were you expecting? And how close is the CBN really in terms of the fight against inflation? And you know the CBN has been involved in different, in activities, interest rate adjustment, to rein in inflation. But how close do you think the fight is against inflation?
Well, first and foremost, was I, shocked to have a 20 basis point increase? No, we expected something quite more than that, but as God may have it, it was a marginal increase of 20 basis points from 34.6% to 34.8%. That's quite marginal, given the fact that the month in question is December. You know, the referral of December, the spending culture of Nigerians and the rest, we needed to see something above 75 or 50 basis points to 100 basis points. But as God may have it, we only had about 20 basis points. Quite marginal, and that is good for us. If you're looking at the trajectory of inflation and what has triggered these very inflationary figures, is beyond what CBN can manage or what CBN can, try as much as possible to curtail. They are structural and fundamental issues, and we need a lot of fiscal policy decisions to tackle them. Except the fiscal policy decisions, just like we had a couple of days ago, that the Warri refinery is on stream,
right.
Port Harcourt refinery is on. These are kind of fiscal policy decisions that can address these issues of inflation, because we are talking about rising cost of living, rising cost of production, energy costs rising. These are things, policy decisions that will address it. If we can have and ramp up production of crude oil to somewhere above 2 million or 2.5 or even 3 million, that will help us to raise a lot of resources in forest-wise to reduce the exchange rate. If you have an exchange rate within or less than 1,000 for $1,
right,
that will drastically reduce the inflation numbers.
The federal government is targeting 15% inflation in 2024.
That's 2025.
2025. Presented in the 2025 budget, of which, of course, is going to be a significant drop from where we are now. And some people say this is very ambitious, perhaps daydreaming.
Not only.
But do you believe this target is realistic? And if so, what step do you think needs to be taken? But I know because you spoke just now about in a policy decision that we're beginning to see from the federal government, the NNPC, the refinery at Port Harcourt, and of course the one in Warri as well. Are this enough really to hit this target in 2025?
Well, if we can gradually implement such policies of such natures, yes, we can. We can tackle the issues of rising inflation figures. Speaking to the fact that, yes, the numbers are going up, are heading north. And looking at what CBN have done in a couple of months now, to increase the MPR from somewhere around 18.75% to a current position of 27.5%. That may also have affected inflation. Yes, they try to rein in on inflation, but definitely it also exacerbating it, because the cost of finance has gone up by this more than 700 or 800 basis points. So it's actually affecting it. But that's only what CBN needs to do. That's the tools available with CBN to tackle, or from the point of the monetary policies to actually tackle this inflation.
Let's look at the GDP above 3% in the third quarter of 2024, specifically 3.46% in the third quarter of 2024. But again, there's a prediction that is going to perhaps drop a little bit from that, but it's an improvement. But some might argue that the economy is performing well overall. But how do we reconcile the fact that inflation is going up, and of course the GDP as well is relatively going up? How do you marry the two together?
Okay, yes. I think it's quite difficult to speak from this perspective that when you have a higher numbers in inflation, it's difficult to have a growth. It's difficult to have a growth. Yes, that's why CBN and the rest of them within the monetary and policy decision makers needs to tackle these very rising inflation numbers. Yes, a GDP of 3.46%, a progressive movement from around 3.19% we had in the, I think in the second quarter of 2024. Now we have a GDP number of 3.46, projected to grow on 4.6% in 2025 as presented by President Bola Ahmed Tinubu in the 2025 appropriation bill. If we should, run with the 4.6% projected by President Tinubu, that's a fantastic number, but we need to grow.
Visible?
It's not visible. It's a projection. That's the wish of the government, just like they had a projection of 15% inflation number, which is not visible, which is not practically visible. We are currently at 4.8% and you are projecting 15%. Whatever miracle that happens this year, we can't have inflation number below 25%. But the government projected a 15%. Yes, it's a wish.
Well, perhaps he has put all the puzzle and the magic to do that. But before I let you go, what should Nigerian, give us your prediction, your outlook in 2025. What should Nigeria expect in terms of inflationary trend? Yes, of course, you've said, well, perhaps, it might be, it's dicey. It's going to be difficult to hit that 15%. So, but in terms of inflationary trend, what's the projection to GDP as well? What's also your projection as we wrap up now?
Oh yeah, but all things being equal, if we are seeing the trajectory of some of the policy decisions of government, which perhaps seems to abet most of the current economic decisions, yes, we may see a GDP growth, a trajectory that may, touch around 3.6 or 3.7 by the end of the year, but we're not going to hit anything close to 4% or above 4%. Then on inflation rates, from the trajectory we've also witnessed, if all things being equal, some of the fiscal policy decisions, seeing them taken, are materializing. We may see the inflation rate maybe a bit below 30%, maybe 29 margin, or 30 to 29% maximum, but we are not going to see anything around 15% by the end of the year. Then on the general growth or general perspective of the economy, we may also be witnessing what we saw in the second quarter and third quarter of 2024, because most of the policy decisions of the government may materialize not in the short-term periods. They may have a medium to long-term materialization. So we may also continue to witness some of the hardship, some of the price increase we have seen. If we can have petroleum products sold, or particularly PMS sold within 500 or less, yes, we may start seeing some relief, but as we speak, we are still buying above 900. If we can have some of these consumable goods drop in their prices, if government can do a lot to make sure that these prices are better, cost of production, cost of living, if it drops, yes, we can see some relief. But currently, we may also be witnessing the rising figures in numbers and commodity prices that we have seen in the last couple of months.
A good time to keep hope alive. A good time to keep hope alive. Steve Nwachukwu is an economist, financial analyst, lead researcher towards asset management. Thank you for coming on Newsnight.
My pleasure.